everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and I have a lot of stuff to talk about for this week. Now, real quickly, let's recap what happened last week. We had a lot of CPI data, which showed higher inflation rates around the world. Well, that probably means raising rates even faster for those central banks. We also had significant earnings announcements. You had Tesla and you had Netflix, which created a lot of waves for those respective stocks. But honestly, almost everybody is beating earnings right now, and the market is just kind of shrugging it off. So let's start there with our earnings calendar for this upcoming trading week. There is over 1,000 different companies reporting this week. And this is just a small sampling that I'm going to read to you right now. Start things off on Monday. You've got Discover Financial Services, HSBC, Logitech, and Cadence Design Systems. Tuesday brings you Microsoft, General Electric, Twitter, Visa, Google, also known as Alphabet, General Motors, and Coca-Cola. Wednesday, Boeing, Ford, Kraft Heinz, and Align Technologies. And on Thursday, this is just the mother lode of monster drivers. If you think about what's been driving these markets for the past couple of years, it's been Apple, and it's the heaviest weighted component in the S&P and the NASDAQ 100. And lo and behold, they report earnings on Thursday. Apple, Amazon, Intel, MasterCard, Caterpillar, McDonald's, and Starbucks. And Friday, which is normally rather quiet, not so this week, ExxonMobil, Chevron, NextEra Energy, and Colgate-Palmolive. Those are some major names out there. And again, I don't know which one of these is going to be a major catalyst for a market move up or down, but what is going to happen is when these earnings announcements come out, there will be dramatic volatility in those specific securities, especially ones like Apple and Amazon that have a triple-figure price target on it right now. Now let's continue to move on. We talked in the past about how important housing data is, and looking at things like new home sales, pending home sales, watching the price of houses as they've been dropping here recently. What impact does that have on our economy? Well, lo and behold, we've got a trio of announcements happening this week with regards to the housing market. So let's start things off with big news. The Case-Shiller S&P Composite 20 Home Price Index numbers on Tuesday at 9 a.m. Eastern Standard Time. A little bit later on in the week, on Wednesday, we have new home sales. That's at 10 a.m. Eastern Standard Time on Wednesday. And finally, rounding out this trio, pending home sales Friday at 10 a.m. Eastern Standard Time. Now again, this is critical because housing represents a significant portion of GDP, which is also coming out this week, and we'll talk about that in just a second. If we get declines in a lot of these major metrics for housing, that could impact significantly our GDP numbers. We're already hearing a lot of reports about how housing prices are declining significantly, one of the fastest declines we've seen in recent decades. We're also seeing how buyers are backing away from bids and offers, and we're seeing 30-year fixed-rate mortgages soared over 7% now. Certainly, that's going to have an impact on our housing market. So there are three announcements to pay attention to for this week. Let's keep rolling because I don't know if I have a chance to finish all this stuff here today. We'll move on to our next one, which is advanced GDP. Now, of course, we just talked about how housing impacts GDP. Speculation is running rampant about what might happen. Well, here's our chart going all the way back into 2000, going back 22 years. You can see that the past couple of months are under zero. The previous expectation was at negative 0.9. We've had two consecutive quarters of negative GDP, and of course that is one of the cornerstones in defining a recession. Now, expectations are we're going to come out actually with a positive GDP number. That's what the expectation is. And you see a little red arrow on the right-hand side of your screen. Right now, expected to be about 2.3%, which would be an abrupt about face to this economic malaise that we feel like we're in, right? Things getting a little bit worse, GDP declining, and people feeling not so good about our economy. If we get a nice pop up to something like 2.3% on GDP, that could usher in a lot of confidence in the marketplace. Not that it's going to necessarily turn around and reverse this trend that we've seen since November of last year in our markets, but certainly maybe a little bit of optimism going forward. And finally, yes, we have more to talk about. We're going to talk about central banks. Of course, we know that the U.S. markets have been raising rates aggressively. We have a couple of markets around the world that are going to be impacted by rate increases potentially. Start things off with the Bank of Canada. They're expected to go from 3.25% to 3.75%, a 50 basis point increase. That's Wednesday at 10 a.m. Eastern Standard Time. And then we move things a little bit across the pond here. The European Central Bank is expected to jump aggressively again. They're looking at a 75 basis point increase from 1.25% to 2%. That's Thursday at 8:15 a.m. Eastern Standard Time. And finally, we got one last one. The Bank of Japan. Now, this one is extremely interesting because you see no rate change expectations. They're currently at negative 0.1%, and that's a tentative meeting for Thursday. But why is this so important? Because the yen is at a 32-year low against the U.S. dollar. It recently hit 150 against the U.S. dollar, which is a Macaulay Culkin kind of scream moment. And speculation is circulating wildly that the Bank of Japan is going to intervene because having such a weak currency is just not good for their economy. Now, the Japanese bankers have focused and said, we're going after speculators right now, but I think there's a much bigger problem for Japan with having such a weak yen. So keep your eye on the Japanese yen here going forward. Over the coming weeks, you will probably see some statements by the Bank of Japan about how they're going to intervene and help prop up the Japanese yen, which could create some great trading and investing opportunities. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.